What if our potential next president puts someone in the Fed who is in favor of the gold standard? We've got big breaking news announced on Twitter that's very interesting regarding what we could see with the next presidency at the Fed, and it has everything to do with the gold standard. But we got more as well, guys. If you heard about the malignant 7, you probably heard of the magnificent 7, but what about the malignant 7? We're going to talk about them and a number of other factors that could result in massive amounts of money, yes, going into your friend and my friend. And thank you, by the way, for being here, friends. Please give this a thumbs up. Don't forget to subscribe. It's free. But our other friends, silver and gold, massive amounts of money moving in if 4 or 5 of these factors come into fruition. And we're going to cover all of that. What's the big trick? You've been tricked. We've all been tricked. Most people have been tricked by the education system, by the financial services industry. They don't tell you anything about gold and silver, but there's one big trick they've pulled on everybody. We're going to cover that as well. We're going to do all this in a half hour, by the way. Also, crazy comparison. Silver in 1980 compared to the Dow, compared to silver now compared to the Dow. This is the knock your socks off moment that you've all been waiting for. But let's get started with this big story about the gold standard. $20,000 gold. I didn't say it. Somebody else said it this time. But let's dig into this and see what they're talking about, see what it has to do with the Fed. And this comes from our friend John Little over at Gold Star, Gold Market Substack. You can also follow him at the Pickaxe. John Little, Big John Little, I like to call him, is like a warrior in the precious metals sector. I've got a link to the Silver Academy, one of his other Substacks, in the description of this and every video. But here we go, guys. Rumors. I don't know. Is this a rumor? We're going to find out. Of a gold standard under, quote, the Donald, Trump's appointment to the Fed, Judy Lynn Shelton, floats it out there on social media. Gold revalued to $20,000. I told you it wasn't just me. I got a lot of grief yesterday. You should see the hate mail I get sent into me, but here it is. Gold revalued at $20,000 per ounce is one way to solve the U.S. debt crisis. Let's dig into this. It gets more interesting. Judy Lynn Shelton is an American economic advisor to former President Donald Trump. She's known for her advocacy for a return to the gold standard and for her criticisms of the Federal Reserve. Hey, I think we like her, right? Donald Trump announced he would nominate Shelton to the Fed. Judy Shelton's social media post yesterday is giant news that legacy media will ignore. So the mainstream media is going to ignore this, guys, but it's major news. And at the right time of the writing of this article, it had about 45,000 views. I checked right before I came on, and it's approaching 300,000 views at this point. But let's look at what she said. Let's go down here first. I don't know if I can't. Oh, well, here, I can go into that. So Risk Take said that in 1971, Nixon abolished the gold standard. 2024, will we introduce it? Question mark. And Judy Shelton, remember, this is Donald Trump's person that he wants to see in the Fed, said, thinking something like that. Let that sink in. But in 2026, stay tuned. Very, very interesting. But there's more. Let's see what else they have to say down here. And then the junior mining investor threw in and price it somewhere above 20K per ounce, and you solve the debt crisis as well. Now we've got a NASDAQ report. The NASDAQ reports on rumors of a gold standard under Trump. Rumors that the gold standard could be reinstated during Trump's presidency centered largely on positive comments he made about the idea. Notably, he suggested that it would be wonderful to bring back the gold standard, and a number of his advisors were of the same mind. Judy Shelton, John Allison, and others support the concept. Now, I don't know if this NASDAQ comment was from when he was president, because I know this came up, or if this is actually very recent news as well. But guys, the bottom line here is they're talking about the gold standard. We talked about this yesterday. We've never gone off the gold standard. I talked with Rafi Farber this morning, and we touched on this subject. You can watch the interview that I did with him. It'll be out Tuesday or Wednesday. Like, did the world really ever go off the gold standard, the silver standard? They're kind of like always there. I like to use the analogy, they're like a bear that's been hibernating since 1971, right? Starting to wake up. And when they wake up, we could be in for massive. I mean, what do you think when you hear this? The gold standard. While we're up here, let's just go look. We took a look at this yesterday, but this comes from Matt Peipenberg. It was an article on Zero Hedge. Look at this chart, okay? Start up here, 1971, all right? Gold, $35. Nixon takes us off the gold standard. So from 71 to 2024, gold down. I'm sorry, the dollar down 98.5%, right? Since 1971. So we've got a gold price today. They say 2,300. I just checked. It's still 2,480, 2,490. Nonetheless, okay, that's what's happened. If we go down a further, go over here to the red box. That's the future. All right. Go down a further 90 to 99%. We already went down 99% during the post-Nixon, post-gold standard era. When we had everything working in our favor, we still managed to destroy 98.5% of the value of the dollar against gold. Look at what's happening now. Look at what's going on in the world. Look at the political situation in the United States. Look at the social situation. What do you think when you look at that? Look at the fiscal situation in the United States. Look at the monetary situation. And look at what's going on in the world. You're going to tell me that this red box isn't going to be as dramatic as that blue box? I think I like what they say between 2025 and 2030, right? Because I've heard Lynette Zhang say this. Things are happening more quickly now. Everything has escalated. That's the E word. You ever, when you were a kid, go to the mall with your mommy and ride the escalator, right? Going up and up and up. Things are getting more and more extreme. Things are happening on a larger scale, and they're happening more frequently. That makes this red box occur in a much shorter time frame than this blue box occurred. And if that occurs, oh, look where we go. Huh, Buttercup? Huh? Are you sitting down? We go to 20,000 or even as high as 200,000 per ounce in gold. What will that do for silver? Rafi and I were talking this morning. Rafi has a great interview or a great video he put out on Arcadia Economics on Friday talking about the gold to silver ratio. That even in 1980, and I'm going to talk to you about something that happened in 1980. This is going to blow your mind. Compare a comparison with silver, and it's going to make you feel even more warm and fuzzy, okay, about silver. We're going to get to that toward the end of this video. But let's remember, if we're at $20,000 gold, we'll be conservative, okay? In 1980, the gold to silver ratio got to 20. Okay, if it gets to 20 again, that makes $1,000 gold. How does that make you? I'm sorry, $1,000 silver, $20,000 gold. I'm all mixed up today. Sorry, I was sitting out in the sun for 3 hours watching my daughter Evelyn play softball, so my brain's a little more fried than average. That's where we're heading, right? That is where we are heading. What's going to drive the malignant 7? Have you heard of them? I get so sick. I mean, the stock market, let me just say this, the general stock market outside of a few sectors, including the precious metal mining sector, but the general stock market is a bubble, a big bubble. Can you say bubble? Bubble. Smile when you say it, okay? And are you, I mean, the Magnificent 7, all right? What's going to drive big money into the silver and gold sector? Remember, right? Exter's pyramid, silver and gold are the base of everything. When money starts falling out of the stock market, that's going to be a big thing, all right? Money leaving the stock market because corporate profits are being squeezed because interest rates are higher. the malignant. They're starting to call it the malignant 7, right? Whatever they are, Apple, Microsoft, NVIDIA, Amazon. I forget, there's a few more. People are waking up that these companies are just crazy overvalued. Everybody said, oh, it's tech. Tech's the future. Tech, blah, blah. I'm going to tell you something. There's going to be a day, okay, basement dwellers, right? I want you to smile with me. Smile, because there's going to be a day when they're going to be saying, oh, gold, oh, silver, right? When all the ducks are quacking, that's when we're going to be converting some of our gold and silver into other real assets, because the mass crowd is going to join us. The bond market's toast. I'm sorry, right? Anybody who's buying 20-year or 30-year U.S. bonds, really? I mean, do you have a brain? I could be wrong. Yes, you have a brain. If you bought a 20-year bond at 3-4%, they're still low because the yield curves, but it makes no sense. Money is coming out of the stock market. Money is going to come out further out of the bond market. And here's the beauty, right? Silver and gold down at the bottom, the base of everything, the market cap, the total value, what, 15 trillion total value? Oh, we got 100 thumbs up. Thank you, Suzie. I will ring the dinger here in a second. But 15 trillion. Hey, Snakebite, thank you. Just smile. That's right. I need to smile more. Look, I got to be honest with you guys. I need to smile more. So I got this sticker from my local McDonald's. I think they're meant for the kids, but I'm going to stick it here on my new microphone so I remember to smile more, because, you know, smiles are contagious. Nonetheless, where was I? Oh, man, I forgot. Oh, 15 trillion is the total market cap of all the gold in the world, period. Okay. 1.5 trillion is the total market cap of all the silver in the world. So that little bit, what is that? 16 trillion has what? 300 trillion in world debt. Who knows how much paper money? Who knows how much derivatives are what? 3 quadrillion? Like if 1% of the money that's supposedly exists in the 3 quadrillion of derivatives, 1% would be $30 trillion. If that flowed into silver and gold, that would like triple the amount of money alone. Okay. Not to mention everybody waking up, not to mention everything else. Real estate, right? Oh, you want to buy a house right now? Good luck, right? Good luck getting a mortgage. If you want to pay 8%, 7%, the real estate market, residential and commercial, both more money leave. Here's what's going to happen. People are going to start looking again. Stock market doesn't look too good. Bond market. Well, why would I want to buy a bond when if inflation's going to be higher than the rate that I get on the bond? Do I want to buy a house? Well, the same house I could have bought 3 years ago for $300,000 now costs $500,000 or $600,000 or $800,000. Want to buy some commercial real estate? People are itching to go back into the office, aren't they? I mean, come on. Where's all this money going to go? I'll tell you where. Things like oil, farmland. Oh, yes. And silver and gold. And it will be a beautiful, beautiful day. But wait, there's more, because when we have loss in confidence in the Fed, that's already happening. People are waking up, right? When people lose where'd it go? Where'd it go? You know? Yeah, I wish this wasn't the case. I wish this wasn't just nothing but paper, right? I wish it was still backed by gold or silver, but the reality is when people wake up, and it's going to be inflation. Inflation is the godfather, right? Of the silver and gold market. And when people wake up, when that inflation eats away more and more, right, at the value of that paper money, and then all the sheeple. You're not a sheeple. You're not. No, you're here in the basement. You're a basement dweller. Trust me. I even get the analytics from Google. You know that? And they've told me that, like, my audience, they'll pay advertisers, those ads they force you to watch. Okay. And they make me watch them too, even on my own show, right? Advertisers are willing to pay big money to advertise, like higher than almost any other. It's called CPM rate or something like that, because the people that view this are smarter, basically, have more money, I guess, as well, but smarter. I forgot how they said it, but it's like it's in kind of you're in a very elite crowd. So you're not, no, you're a basement dweller. But when the sheeple wake up, when the sheeple finally figure out, like, keeping my money in the banks, all those different things, the dollar's losing value. The real estate doesn't look good. The stock market stinks. Bonds? Well, yeah. And that, what about gold and silver? I think I remember my great grandpa talking about that. And some of my neighbors who might just happen to be basement dwellers. That's when we're going to see a massive amount of money coming into the precious metal sector. Let's talk about the financial services industry and how they trick you, right? They're tricky, right? The mainstream financial services industry, I'm not a huge fan. To each their own. I'm not offering financial advice, but I will offer financial advice today. It's a special day, okay? We'll get to that financial advice in just one second. Right now, we want to say thank you to our channel sponsor, Pimbex, P-I-M-B-E-X. Let's run out there real quick. Let's see if we get a quote on silver and gold. Thanks again, Snakebite, for that super chat and all your support, Snakebite. Gold, they're saying here. Let me update this. Okay, gold, $23.92. I don't think it's trading yet. Silver, $28.70. If you're looking to buy gold, silver, platinum group metals, go check out Pimbex. Look, I learned about the company from viewers, like 3 or 4 of you. This was a year and a half ago. Said, Ron, check out Pimbex. They've got great prices. And I thought, well, yeah, but at that point, honestly, I'd never heard of them. So I did my research. I read reviews. I made an order with them. I discovered what everybody told me, that yes, their prices, what I was shopping for by far were the best, but the customer service was awesome. And I know I'm getting yelled at by Suzie here. Hold on a second. Let me finish with Pimbex. Customer service was great. The packaging was great. I got more metal for my money. I'm not going to tell you what to do, but I would just highly recommend that if you're out shopping for metals, consider. I talked to a guy earlier today who said he told one of his friends about Pimbex and how happy he was that he'd bought a big amount. I'll leave it at that. And that he was thrilled with Pimbex. You'll find, I believe, what I found, that with Pimbex, you get great everything. And on top of it all, you get more metal for your money. Let's see what Susie's yelling at me about. Hold on one second here, guys. 100. Okay, Jake. I have 2 other super chats. Sorry, guys. I can't see all these super chats. I appreciate the super chats. I do. And thank you. Okay. Oh, wait. Is there a way to do that? Hold on here. Oh, yeah. Here we go. Ron McAdams. Thank you. Thank you, Ron. There's our friend Ron. Take a look at him. And Craig Edmonds, Mr. Craig, our friend out on the West Coast, Northwest, the Great Pacific Northwest. We're going to do the pocket pinger. Do you guys know this? This thing is cool. Somebody sent it to me, and it's really an awesome tool. And I have an app on my phone. All the different coins make a slightly different noise. This is an American. Oh, boy, here I go again. Me and my show and tell. I just love. I'm sorry. I love Americans. So I love these things. And I just lately got to buy them because the premiums were down. Anyway, they all make a different noise. I'm going to ring this for you. See if you can tell. And I'm going to put Craig up. And then we're going to dig in. We got more to talk about. But here we go. It comes with a little stick. It's called a stack stick. And 1, 3, 4, 5, 6. I'm smiling. 7, 8, 9, 10. All right. That's 10 rings of the bell for 100 thumbs up. Thank you, guys. I appreciate it. Okay. Free finance for the advice, financial advice. Yes. Okay. Here we go. Free financial advice. Big trick by financial service industry. And I wrote this out for you. That's how important this is. It's the big double D. Can you say double D and smile when you say it? Everyone talks about diversification. What do they all say? You need to diversify. Oh, give us all your money Okay, I'm from the mainstream financial services industry. We want give me your money and I'm going to put you in all these different mutual funds and we're going to diversify. Okay, be diversified, which I won't argue against that being a good thing. I'm not diversified. I'm all precious metal mining stocks, but that's just my situation. I would say that they're wrong. Okay, it's a double D. Diversification, okay, is not the most important thing. The most important thing is to get rid of debt. Get rid of your debt first, okay, and then you can invest and diversify. That's just my opinion. That's just my financial advice. I'm not saying that I'm right necessarily, but I do understand money from having studied it at a top tier university in accounting. They don't want you to pay off this is why paying off debt's so important. Because if you got a debt that you're paying, I got 200 thumbs up. We're going to ring the cowbell in just 1 second. Wow, you guys, we got 700 people on a Sunday. This is why it's so important, in my opinion, to pay off debt first. Okay, because if you've got $100,000 loan that you're paying 7% on, or $100,000 in credit cards that you're paying 25% on, right? You know for sure if it's 7% that you're losing $7,000 a year. You know for sure if it's credit cards, 100,000 at 25%, that you're losing $25K per year. So if you pay that off first, that's an automatic win, baby, an automatic win. And you could say, well, I could invest that money and do better. Okay, if you've got 100,000 in the stock market and 100,000 in debt, okay, you got to make more than 7% in the market for you to get ahead. Okay, but you could lose that stock that could go down by 50%. So then now you've only got 50 grand in the market. You still owe the 100 and you're still paying the interest. So I don't care what the financial services industry says, pay off your debts first. That's my opinion. Now, some debt like mortgage debt at 2 or 3%, I can see a bit of an argument, but overall, they're always saying, oh, no, you need to diversify. No, that big D word they need to put first is debt. Okay. To me, it's black and white. Diversification. And the other thing is diversification is an imperfect art. Okay. Nobody knows how to perfectly diversify. I can tell you, paying off debt is perfect. It eliminates that expense, that additional expense, and you will come out ahead. What about 1980? This is crazy when I read this. This is absolutely nuts. Okay. It has to do with silver. Before we do that, I'm going to butter you up and say thank you for being here. When you're in the basement, we're going to talk about silver and gold. We're going to talk about where things are going. We're going to dig a little deeper. And I appreciate you being here. You are the most important part of Ron's Basement. Thank you for the thumbs up. That helps get the word out to more people. Okay. And you can always subscribe. It's free. And thanks again for all the super chats. All right. We appreciate it. 1980. Sit down. Make sure you hold on to your socks or they're going to get knocked off. Okay. Buttercup. In 1980, I was 10 years old. What was I doing in 1980? I'll tell you what I was doing in 1980. I was playing with this, right? The silver stomper. Hold on. All right. Anyway, in 1980, the price of silver, they say, was $40 an ounce. We know it hit as high as 50. All right. Nonetheless, this is nuts. You know what the Dow Jones Industrial Average was in 1980? It was 1,000. So think about this. 1980, you had $40, $50 silver. The Dow Jones Industrial Average was at 1,000. Today, even though we've had a great run in the silver price, absolutely, right? But we're at what, $28, $29 per ounce. Silver's lower today than it was in 1980. I know you know that, but think about this. This is the part where you want to hold on to your socks. The Dow has gone from 1,000 in 1980 to 38,000. I had to look it up. I couldn't believe it. I was like, this can't be true. It is true. Okay. Silver I mean, silver is lower now than it was in 1980, and the Dow Jones Industrial Average is 38 times higher. And you're going to tell me that silver is not the most undervalued asset on the face of the earth? Even the organization called the Silver Institute, which is coming under a little bit of criticism lately, even with their numbers showing the supply demand dynamics, silver is there's nothing like it on the planet. There's nothing like it. And you're going to tell me, right, that the price today is lower than it was in 1980, but the Dow is 38 times higher. And you're going to tell me silver, number one, silver's not undervalued, and that the general stock market, think about it, there's 38 times more money in the Dow Jones, okay, today as opposed to 1980. And in 1980, we had silver that was not twice as high as it is today, but pretty darn near close, okay? I think it's safe to say, though, that in 1980, you would have been better off putting your money into the Dow. But who knows, right? Hindsight's 20/20 vision. Do you think the next 45 years are going to present the same thing? I don't. I absolutely don't, because we got big problems. We've got an inflation problem in this country right now, and nothing is going to impact the price of silver and gold. Number one, like inflation. Number two, geopolitical turmoil. All right, we're going to get a crazy story about inflation. All right, it never ceases to amaze me what is going on out there right now. But before we get to inflation, don't forget geopolitics. Right, war. We're not going to beat that drum, but that's the other major key that will support the silver price and gold price as we move forward. Okay, hold on. Jake just sent something to me. Oh, hey, Chris from Arcadia Economics is here. You guys all know Chris Marcus from Arcadia Economics. Please say welcome to him. A guy that really taught me a lot about silver in my early years. So, and a great guy, and I consider him a great friend as well. You guys all know Arcadia Economics. If by chance you don't, go check them out, right? Top notch, good friend of Jake from Jake's Custom Parts as well. But let's go to this article about, we're gonna talk about more proof of inflation. And where'd it go? Is this it? Here it is. This comes from Zero Hedge. And I don't curse on this show, but $7. Social media influencer rages after paying $7 for an apple at Whole Foods. All right, I'll just read a couple of these types. I hate to see the millennials get so mad, but here it says, we're being told that Bidenomics is working and that inflation's under control. Yet, when we see articles about shoppers in America paying $7 for an apple, it's hard to make peace with the narrative the current administration is trying to convince the populace of. Right, like everything's good. Larry Summers, he was the 71st Treasury Secretary of the United States just a few weeks ago, came out and said that the real inflation rate, I think it was 2022, the real inflation rate was like 18 or 19%. Right? Everybody knows. And now they're trying to tell us, oh, inflation, we've got it. The Fed's starting to win, right? Well, yeah, well, maybe in your cookbook numbers, you can tell us we have 3 or 4% inflation. But that's after we took a massive hit in 2022. All right. That was the case last week when a Boston-based influencer took to TikTok to claim that she paid $7 for an apple, and only one apple, at Whole Foods, according to a report by the New York Post. All right, guys, we're going to wrap it up here for Sunday night. It's going to be interesting to see what goes on this week in the silver and gold markets. You know I'm going to be here for you each and every day. That's the plan. In the meantime, take care of yourself. Be nice to yourself first. That'll help you be nice to other people. Thank you for being here. I'll see you soon.